This weekend, we have seen some altcoins have a pretty big run whilst Bitcoin has maintained its weekend trap. And this has presented some really good weekend trading opportunities for those that do like to trade on weekends. However, there is something that you need to know that may potentially mean the real opportunity has not even presented itself yet. And that's what we're going to get into in today's video. So if you are new here, welcome. If you're returning, welcome back. Be sure to smash that like button nice and early, because in this video, I am going to show you a little known fact, which is that when trends are created on a weekend, they almost never continue when the market reopens for the following week. And I'm going to show you some examples of that right now. So let's get into some of these altcoins, and I'm going to take you back to last weekend to show you exactly what I mean. Having a look at 𝗕𝗵𝗴 from last weekend, we can see that the low was created at the end of the US session right here. Throughout last weekend, price then moved to the upside and away from that low. When the market reopened, which you can see from this dead gap zone shaded area right here, we came back for a return to that low. Now, here's the thing that makes the potential upcoming opportunity a much bigger one than what has happened over this weekend. When I say that the price will generally not hold the trend that is created on a weekend, for the most part, it will bring price back to the Friday price prior to the weekend. And what that means is that you have a very easy target for the coins that have run this weekend. However, all you need to do now is look for your trigger to enter. And that may not be right now, but I'm going to show you in today's video exactly what to look for when the time is right, and for when some of these altcoins that have had irrational moves to the upside are getting ready to turn around. So having a look at this one example, you can see upside, price reversed when the market opened, and it came back to the prior Friday low. From there, it makes its decision. And in this case, it decided to bring price down a little bit lower. This area that I have here is a previous unrecovered vector candle, and they decided to bring price into that zone. When we have a look at another example like SHIB from last weekend, this circled area here was the price around the close of Friday. And from there, we shot up through last weekend, had the reversal, and throughout the start of the new week, we came back to that previous price on Friday. One more example, looking at GMX. Here, this was the price here at the close of Friday. On last weekend, we had this move to the upside throughout the weekend. And as you can see, when the market reopened, we came back for a return to the Friday level. And that is where a new decision was made. And in this case, they decided to continue it down lower. So as you can see from these three examples, there are very, very easy targets. And all you need to look for is the trigger to actually short. So this gave me a little bit of an idea today, and I want to play around with this idea with you guys. I want you to do it with me, and we're going to come up with our little Sunday night strategy. And what I decided to do was use the banter bubbles, and I'm using the today, the today filter for Sunday. So this is going to be a Sunday strategy. And what we're looking for is the coins that have moved the most within the last 24 hours. That's why we're choosing today, because we want to know the weekend price action. So that's why last 24 hours. We want to know the weekend price action, what has had the biggest move, whether it's to the downside or the upside, knowing that it's likely that price will reverse into the new week. That gives us an amazing opportunity to look for reversal trades. And if we have, I've had a look at a couple of these that we're going to go through together now. And there's two things that I want to show you. Number one, the most important thing for you to be able to assess when there is a weekend move, because remember the CMEs are closed, the market makers, I always say they're out at the strip club on the weekend. They're not caring about price. But there's two ways that price will move on a weekend. One will be driven by market makers regardless of the markets being closed. One thing you need to understand is that all financial markets, not just crypto, but all of them, about 80% of all movement that we see on all financial markets is controlled by algorithms, not humans. You are trading against computers, not humans, for the most of the time. What that means is that moves can be made 24 hours a day in crypto because it never stops. It never closes like other markets. So sometimes you will see typical market maker patterns on a weekend. Sometimes it's completely irrational behavior. And I'm going to show you the difference between both. Why do I want you to pay attention to that? Because if it's an irrational behavior, there is a higher chance that the market makers are going to take that move back. And that should be your focus to look for as we come into the open of a new week. So let's take a look at some of those examples. And I've picked out 5 points using the banter bubbles to use as an example. We need to start on the higher time frames to get an understanding of where we are before we can even think about looking for reversal trades. And another thing that I want to make you really, really aware of is that if we're in a strong macro uptrend, a reversal on a lower time frame can equal just a pullback on a higher time frame. So it doesn't mean, I'm not saying to you guys that we're looking for shorts to short back down to new lows. If we're looking for shorts at key levels on a lower time frame, they could equal just a pullback on a higher time frame. But here's the risk. With you having a bias that we are higher time frame bullish without a proof of the move. Now, a proof of the move comes when there is change in market structure. So to give you an example, you've got this low here, you've got this higher low here. But when you look at this price here, it's equal to here. So a change in market structure needs to look like this. You have a low, a higher high, higher low. That is a change when it starts to go like this. But if you have a look here, we've got, damn it, sorry, there's something in the way there. We've got this here and this here, but this is equal to this. So we don't actually have the change in market structure. So a move is not proven until the market structure changes. It could just be the start of potentially something. But in order for this is Pepe on the daily time frame. In order for this to actually be bullish, if this is going to be the start of a daily time frame W, it has to, the right side of the W has to break above this area right here. Once it breaks above, it can then come back to retest. And as long as it successfully retests, you would then expect continuation to the upside. Now that retest here, one second, that retest here only needs to be a higher low in relation to this peak right here. So it doesn't matter if it retests this level or it comes even down further closer to here. It doesn't matter. As long as this peak is higher than this, the W will be confirmed. So you can see that whilst Pepe is looking great on a lower time frame, it currently has a lot of work to do because it has not even got to the point of the breakout of the middle peak of the potential W formation on the daily time frame. In addition to doing that, you also need to mark out your closest vector candles, your daily vector candles, and because they become like the battle zone, right? The area, once you have a run up into that vector candle, that becomes the battle zone where it may potentially reject. And until price actually does break the middle peak of the W, when I say a W is not confirmed until it breaks out and retests, that means anything under the middle peak of the W could turn into a failure and could end up giving you new lows. So that's why we don't assume. And so when we have a look at this Pepe on the daily time frame, we can see that this red candle right here is the most recent vector candle, and price is trying to make its way through there right now. As long as you know where it is, you're just keeping that area shaded until price actually does break through above it. Once it does that, you move it up to the next vector candle zone. For now, it stays here because it hasn't broken through yet. So the important thing is, if you're going to look for reversals, because you now know that rule that it's likely to reverse because of the weekend pump to the upside, then what that means is you now know where you are in a higher time frame. You can go down to start looking if there's any hint of a potential steam running out that may give you that lower time frame pullback. And the reason that you want to short lower time frame pullbacks is because until a higher time frame move is proven, again, I'll say that it is the W formation here, the W formation that will break above this, that will come back and retest before continuation. Until this happens, any potential pullback on a lower time frame can actually turn into a full-blown reversal. There is no guarantee right now, without a proven W retest on any coin that you're looking at, that we are macro bullish yet. So be prepared for both. So when we have a look and we understand where we are on 𝗵𝗴, all we're simply doing from this point is we go down in time frames one by one, and we look for that high volume inverted hammer that is stopping the momentum to the upside. If we don't have it yet, we wait. It's as simple as that. So looking at the 12-hour, we can see here that we do not have it yet. We just go down in time frames. We don't have it on the 8-hour. We don't have it on the 6-hour. We don't have it on the 4-hour. And now we move into the 1 hour. Now, let me show you what happened here on the 1 hour. This move here is called a trapping volume formation. I'll explain it to you in a second. Very interesting level that is a sign of reversal. And this shaded area was the last unrecovered vector candle to the downside that price spiked into before creating that trapping volume formation. Now we look here and we can see out of that we had a rise. We had a board meeting, a sideways consolidation. We had another rise and another board meeting, then another rise. So we have rise 1 here, rise 2 here, rise 3. This is following the market makers' business model of how they trade, which means this move in 𝗵𝗴 is driven by market makers. That makes this move predictable if you understand this method. Now, just to draw it out for you in case you're watching me for the first time, price will usually start with an M or W formation. We go into rise 1, retrace or consolidation, rise 2, retrace or consolidation, rise 3, then we get the M formation reversal, drop 1, drop 2, drop 3. That is all we're simply trading here. So when you keep that idea in mind, you can see here that trapping volume formation, rise 1, sideways, rise 2, sideways, rise 3 is what we are currently in right now. So this becomes a lot more predictable to start looking for reversals, because if the model is playing out through the weekend, you know that the move is driven by market makers. If you know the market maker business model, then you know where to look for when they're going to reverse price. If we have a look at the liquidation levels on 𝗵𝗴, this is the shaded area, the vector candle that I showed you on the daily time frame. Look how many liquidation levels that we have right in between it. We've hit on 1, 2 of them already. So, but we don't have yet a stopping volume candle. So there's no reason to short 𝗵𝗴 just yet. We are literally in the midst of the third rise. And we're looking for, as I mentioned, that inverted hammer, or could even be a railroad track or any, oh my goodness. Sorry to interrupt this broadcast, but there is a water show going on right outside my window, and it is so pretty. And I wish that I could show it to you, but you know what I'm going to do? I'm going to record it and I'm going to put it on my Instagram. And so if you guys want to check it out, I'm in Singapore right now. There's a water show. It is stunning. And go to my Instagram, Trade Travel Chill, not the scammer ones, the real one. And you'll see it in my stories. I love sharing my travels with you guys. But anyway, back to the story. So what we're looking for now is as price starts to come into these liquidation levels, we want to drop down to a lower time frame. So down to the 15-minute, and we want to make sure that we can identify the model number one. We have to be able to identify our 3-level rises before we even start to look for reversals. So I'm going to zoom out on this. We're going to zoom out so that I can explain to you that trapping volume formation. So this is it right here. So what a trapping volume formation is after we have 3 hits to low or 3-level drop, you can see in this move down here, we had 1 here, big move, 1 here, 1 here. We will finish that move usually into a vector candle with a really big hammer. And what price will immediately move away from that and not return to it, but it doesn't come back to create the second side of the W either. So usually when we're looking for trend reversals, we're looking for a W formation before price takes off. But a trapping volume formation is another version of that, where they do the first spike and after that they just send price sideways. What's happening in this zone is the market makers are accumulating after doing the damage down here. And then when they're finished with their accumulating, as you can see here, they move swiftly out of the zone. So that creates the rise level 1. Now, when we zoom out on this, sorry, I have to zoom out heaps for you guys to see it. 1 second. Here we go. So when we zoom out on that, we can see trapping volume formation, fast move out to the upside, board meeting sideways. So that's rise 1, board meeting. This is rise 2, board meeting. This is rise 3. So this is where you start looking for them. Now, I have to really stress, I'm not saying short from now. I'm telling you what to look for when the time is right. This could, because the momentum is very high. Look at this. The price is still above the 10 EMA. If price is above a 10 EMA on a 15-minute time frame, we're extremely bullish. So I'm not saying short now. I'm saying watch these levels and look for a certain reaction at those levels to get a hint that the move might be ending soon. Then you get prepared to short. It doesn't matter what the price is when that happens. You're just looking for the right signal to make a move. And I'm telling you, it's not there yet. We are planning ahead. Remember, it's Sunday night. The market is not open yet. But any time from now into tomorrow, potentially even Tuesday, is where we're going to end up getting our trigger, regardless of how much price continues to run from now. All we're looking for is triggers. We're not looking for price. I told you guys this last week. Stop paying attention to the price, because it's not about the price. It's about how the candles form their levels and the hints that they give of potential reversals. So what you're going to be looking for is a first spike, which is usually going to spike into some liquidation levels or a higher time frame vector candle. So with Pepe, anywhere in this zone is where we're looking for that. That's not where you make your move. That's just part of your setup. So if this was to spike up, you would then wait for it to fall away first. Once it falls away, it's going to try to repeat this level. So it will move up, but it will fail to get back to the level. That's what starts the second peak of the M formation. If you're an aggressive trader, you get in on the second peak of the M. If you want to be more conservative, which is probably the better thing to do when we've had such a weekend run, you will wait for price to break down below the 50 EMA, whatever time frame you're trading on, break down below the 50 EMA, come back to retest it, give you a lower high, and that lower high is where you short. So aggressive entry, second peak of the M. Conservative entry, the lower high after the M. How you take those trades is up to you. It's not for me to say. I'm just telling you that those are the 2 triggers when it comes time to reverse. So this gives you an idea of weekend price action that is in the hands of the market maker because it's following the model. Now let's have a look at another one that is showing irrational retail behavior that is likely to be the target when we get back into the start of a new week. Now, this is Rune, and Rune's had quite a run. Have a look at this in comparison to what I just showed you. Can you easily see 3-level rises and pullbacks and consolidation in between. You absolutely cannot see that on this. We've had these stop hunts here, which is designed to wreck shorts on the way up. One here, one here, one here, and even one here into this was a 4-hour vector candle that's just been eaten right through. And so here's a complete opposite example of why you shouldn't just be blind shorting Rune right now. It's not an intelligent thing to do. There is nothing in Rune telling you that it's time to short yet. There's no high volume inverted hammer. Price is well above the 10 EMA on a 15-minute time frame. It's eaten through all of these liquidation levels. We're going to have a look at a few in a second. But in addition to that, look at the rising open interest. This shows you that this is driven by retail, because who the hell would buy this level that have any brains? Like, after a run like this, the rising open interest tells you people are still opening positions. Let's have a look a little bit deeper at Rune. Let me show you something really interesting. So prior to the current move that we just had here, when price made a higher high here, the CVD made a lower high. What that means there is that shorts were being liquidated, because if we have a look here in the open interest down here, we had a sharp move to the downside. This was the first wick that I just told you. Those wicks to the upside are trapping people into positions in the wrong way. So what happened right here was, as price started to pull back only a tiny bit, everyone thought, or not everyone, but whoever opened short positions on that believed that the move to the upside was over. This is the biggest mistake that people make, is trying to pick tops and pick bottoms when there's been a massive irrational weekend move. And people are getting wrecked on this. So we had only this small pullback here. Shorts were opened up. Bang, fast move to the upside with a stop hunt, take them all out, right? And we can see that because of these big red moves to the downside on the open interest. Now, the thing I want to caution you about Rune, though, is when you have a look at the spot CVD, and this may not make a lot of sense, but just bear with me. When we look at the spot CVD, over here, when all of this was happening, you can see as we zoom out that this was rising. So this means people are not only leverage trading Rune, they're also spot buying Rune. And obviously that happens because there's some fundamental news, people believe in it, everyone's jumping on, they want to, add it to their portfolio and whatnot. The problem that we have is that the spot buying seems to have leveled out. So we've kind of stopped at this level here. We had a bit of a pullback. So this little pullback here means people who bought at spot were taking some profit on that. And now we've returned to that level. The key is going to be to see if there's still a rationality in the market. If we can break above that spot level, then it means people are still spot buying Rune, and there may be more upside to come. However, at the same time, we want to start looking for divergences, like we had this divergence here, which was the trap. But now when we look at the current, we've got rising price and we've also got rising CVD. That is strength in the trend. So again, if there's strength in the trend and the trend is to the upside, you don't short that yet. There's no sign to short it. So really, you're trying to look for this divergence before you even think about shorting. Now, when we come back to price, as I mentioned, we've just taken out these 3 liquidation levels above the 4-hour vector, which is now gone because we just ate right through the whole thing. We have this daily one up here, which is a wide range between 1.498 to 1.694. I just want to make sure I'm looking at your questions, because sometimes I go on tangents. But let's have a look at high block and see what is hanging around in Rune. And if we, on that move up, that spike up, that was obviously a stop hunt, did we get any new levels of liquidity come in above price? Because we need to know that now whilst this thing decides to load. Damn, thought it was a usual fake header pick. No more of that. Okay, whilst this is loading, I'm just going to move on. So we'll come back to Rune. So high block takes ages, but we'll come back to Rune. Let me show you another one that is market maker driven. Actually, I'm so keen to show you this one. because this is a really good lesson. So SHIB is another market maker move, driven move. Same thing on SHIB. Have a look here. This was the trapping volume formation. Let me zoom in on it. See here how they trapped short to the downside, then they just went sideways for an extended period of time. That was the market maker accumulating. We had a rise through here, a retrace, a rise. Let me zoom out on this. Sorry, I'm doing all of this on my laptop from the hotel room. But we had rise, retrace, rise, board meeting, rise. So the 3 levels are over and the M formation. Let me teach you something about weekend price action if you get an M or W formation on the weekend. Here is the problem. When price enters a area of interest, which is a daily vector candle, which is what this M is, because this whole area is shaded, so that's a daily vector. You need to know the significant high prior to the M, and that is this circled little wick right here. The reason that you need to know that is because on weekends, you are being trapped as a retail trader, which means that you are likely to be set up in typical retail patterns. So, and sometimes they play out and sometimes they don't. But the significant high gives you the idea as to whether or not an M formation 3-level drop is going to play out, or is the retail pattern going to play out instead. So when you have a look at this wick right here, this is where price is right now. If this M formation is going to play out and you're going to have further drops to the downside, price needs to get below this wick right here. In addition to that, this green line here that is at 1,000,000 zeros, 10, 5, 18, that is the high of last week. And so it's a very significant level that we have that significant high at the high of the week, and then the trap in the M has happened just after it. And at this point in time, price is just about right at that zone. So if you are short on SHIB already, you need to be watching next that it can actually break down below this wick right here and below the low of the high of the week. Then retest. It might come back to retest the 200 EMA if you're lucky. Then you should be happy to hold on to your shorts. Until that happens, however, SHIB is a risk if you're shorting it. The reason it's a risk is because what I said to you, that retail patterns can play out on weekends because they're traps. If we draw this right here, at this point in time, we have a wedge formation. So this could come down and look at this, number 2. I'm getting so excited over this stuff that I'm telling you. I hope you are too. If you are, please smash that like button. I am obsessed with this kind of thing. But this next yellow circle here, remember I said to you that if price has an extended move on a weekend, it is likely going to come back to revisit the Friday price action. Look at this. This here was the Friday price action. We are almost already revisiting it. We're not there yet, but we are we're basically there right now. Now, price can revisit that Friday price action, hold the wedge, and continue to the upside. So that's why I'm saying, like, even though you have an M formation on SHIB, until it breaks and holds below the significant high before the M, I would not 100% bank that this is going to continue to the downside. It's looking nice. It's looking okay, but we need to get and hold below this as a caution to you guys. If you're not in a short position and you're waiting for one, let it move away from this 200 EMA. However long it takes, whatever the move is, who cares? Eventually, if it's going to start moving to the downside now, it will come back. It will retest all of these EMAs, and that is going to be your safer entry to short. These here, again, not this one. If you entered off that, you just guessed. But if you entered off this, then this is an aggressive entry. If you entered off this is a conservative entry that may fail because of this move right here. But if you enter after this breakdown and a retest of the 200, you've made a good decision, providing the retest of the 200 still looks bearish. So that's what I wanted to say about SHIB. Market maker driven, should play out, but we've got to clear this level first. Now, what else do I want to show you? TON. I don't know what these coins are or what they do. I'm literally just a trader. If you want fundamentals on this, you've got to watch RAN. I could care less what coins do. I just look at the movement. Look at TON. This is the one I want to get. Like, this is the one I will stay up for, because have a look at this one. Irrational move to the upside on the weekend. Look where the Friday close is. It is so far from the current price. We are about to enter the area of interest, being the 1 hour vector candle. We do not have a stopping volume candle yet, so it's not time yet, but you are looking as it gets into this zone or underneath this zone. We are starting to look for that candle to potentially give us the first side of the M formation. If price breaks through this zone, then we're looking to the next one higher, which is a very big zone, but it's a daily one. Let me zoom out on the daily and let me show you why I think that this has potential to be juicy. Is because here there's a potential for this to be a W formation. But remember, I said to you that a W is not a W till it breaks the middle peak and then comes back to retest with a higher low. Then you expect continuation. Price is still on its way to the middle peak, and we have a daily vector candle right there. So if this, let it run. I don't care, like however long it's going to take to run, let it run. But see what happens in this area. If it cannot get back above the middle, peak of the W formation, we may end up having a really juicy short on our hands here. However, we've got to get that trigger. If we don't get the trigger, then we're waiting to see if price can break through. And if it can break through, great. We flip our bias. We come back here. We wait for the higher low and we start going long. We're just not doing anything until we have one of those two things. So now that you know that on the daily time frame with TON, T-O-N, that we're at the point where it's make or break. It's either going to break through this daily area of interest, or it's going to reject there for further downside. First of all, this is a good sign so far for further upside, because look, 50 EMA rejection, 50 EMA rejection, 50 EMA rejection. This is the first time it's actually breaking the 50 EMA with a vector candle. So that's one plus for it. But now you go down to the 15-minute time frame, knowing where you are, and you're having a look. Do I have anything telling me to short this yet? No. So we're waiting for that. If price comes back into here, we're looking for that first side. The first side is not where you enter. The first side is just where you start to build the idea of a potential reversal. The second side comes, you either enter there or you take the conservative entry and you enter the lower high. Now, because we've had such a run over the weekend, the conservative entry is going to be the safer entry. Just know that. But it's up to you and your trading style how you do it. Next, what do I have? Any others? Yeah, I do. I have two. So 𝗖𝗄. Let's look at 𝗖𝗄. 𝗖𝗄 is another. Oh yeah. Okay, I'm excited for this one. 𝗖𝗄 is another market maker mover. And that is because, okay, this was the Friday move right here. This is where the Friday price was before the market closed. We had this move up, and look what 𝗖𝗄 has done so far. If you zoom in on this area, again, this price here is the high of last week at 2.044. We've had 1, 2, 3 hits to the high of the week. The final hit gave us a stop hunt, and then we moved away. The key here now, if this is going to pull back, it cannot return into this red vector candle right here. So this becomes your area of interest. Now, I have to caution you here. I'm not saying I think it's going to go down, because the other problem with this is it's holding above the 200 EMA. So you literally have to be prepared for both. I wouldn't long anything after a move like this. So therefore, I'm not looking for long positions. I'm looking only for short positions that I can be in at the top of. If it keeps going up, fine, I don't care. I wait a little bit longer, but I would never in a billion years long something that's already done 10% back to the high of the week. No, thank you very much. So it's reversals or nothing. So here we go. Area of interest. If price can stay clear of this or come into it and give us bearish looking candlesticks, then that could be a second chance entry, because as long as it closes as a lower high, so let's just say price can come up like this, lower high, then give you bearish candlesticks, you'd expect further downside. At the same time, that's going to look like it's building a bear flag, but you don't want it closing back above this red vector. If it does, we sit and we wait a little bit longer. And then I've got, I think, one more. GMX. Let's talk about GMX on the daily. Okay, because GMX is quite interesting. So if we zoom out on the daily for GMX, look here, we had this area of interest here. This is a large, it might be hard to see, but can you guys see? Yeah, I think so. So you've got here a large vector candle. We've not closed the whole candle right here. We've not closed it right here. And this has currently created a higher low. So is there a chance that this is a W formation? Potentially, but it hasn't even started to move away yet. The other thing with this, though, is that it could be a 3-level drop H pattern, which is just another thing. So with that, what am I doing here? With that, what a H pattern is you have your 3 hits here. So one hit here, one hit here, one hit here. Price pulls away, but it curves and it comes back and literally creates a H. That's because whatever it spiked into down here, it didn't pick up all of the orders, and so it has to come back a second time. This is not a reversal or a continuation pattern. It's a reassessment pattern. So when price does come back to the first peak, you then have to reassess the price action to give you an idea of whether it's going to break out from that once the damage is done, break out to the upside or the downside. So on GMX right now, on a daily time frame, you'll be looking to see if price can now come up above your EMAs and start to create new structure if you're to believe it's going to the upside. On the other hand, if it creates a lower high, then comes down and breaks below this, then it's probably going to create new market structure to the downside. So there's an opportunity either way on the daily time frame for GMX at this point in time. So now that you know where that is, again, we go down to lower time frames and just see if there's anything worth looking at. If we have a look at the 4-hour time frame, here we go, peak formation high, drop, retrace, drop, retrace, drop. Is this the first side of 4-hour W formation? Potentially. We would want to see it come up to the 50 EMA and then come back to give us a second side of a W if it was going to do that. And then if it gave us the second side, we would expect continuation to the upside. Let's see what's going on the 1 hour. On the 1 hour, we don't have any stopping volume candles yet. No reason to short this yet, but also no reason to long this yet. Like, why would you long a move that is like, unless you happen to already be in, fine, stay in. But if you're not in, you're 7% late. That's not what we want. So you just have to wait. It's broken above the 50 EMA. We've got liquidation levels above price. I like this 200 EMA. I like this one as well because it lines up with this vector candle right here. And we can see that at this point in time, it's had one rejection with these candles right here. It's not over yet. It's still above the 10 and 20 EMA. So let this run, reassess at this liquidation level. If it gets right through it, reassess at the 200 EMA. If it then comes back, let's just say it comes back and does give you the second side of the W, you're probably going to get a pullback where? Maybe into this green vector candle right here, which will be the 61.8. Now, yeah, that's going to take patience. So you come here, you'd have the W, come back here. You'll have the middle peak, come back here, give you that 61.8 entry. Great, no worries. Now we've got an entry to go long, but that's just going to take time. And there's no guarantee that that's going to happen because this is weekend price action to the upside. We have to wait for the week to start to see if the market maker wants to take that back. Let's have a look at the 15-minute time frame on GMX. Is the last thing I think I'm going to it's the last thing I'm going to show you, last altcoin. So trapping volume formation again. See here, look here. Exactly what I was saying before. 1, 2, 3 hits to the downside. Trap people in the wick. Send them into consolidation. Market maker accumulates. This is the Friday price. Well, the good thing about GMX is from the Friday price, we broke out and we retested it already. That's fairly bullish. We've got a second rise here. We've got a retrace here, and it looks like it's now about to make its way for the third rise. So depends where the third rise takes you. If it only takes you into this area of interest, you're looking for those inverted hammer high volume candles for the start of a potential reversal. If it breaks right through it, no worries. We wait for it at the 800 EMA. Easy as that. Now, the last thing that we need to do, if we are to believe that some of these reversals may come within the next 48 hours, and again, reminding you, do not short after this show because we don't have triggers yet. Wait for the trigger. But the last thing we need to have a look at is Bitcoin, because the thing is, if Bitcoin drops down to the downside outside of its weekend trap, it's going to help our chances of those altcoins having reversals, and we're likely going to hit our targets a lot sooner. The problem with the Bitcoin weekend trap at this point in time is all we can see is this false move to the upside. So that triggered longs in that. And from there, we only have this 1 wick to the downside here, which may have already stopped them out, but also triggered pending shorts. And we're really still inside the weekend trap. So Bitcoin is really not giving us much right now to know which way the false move is going to go. We really just have to wait and see when it drops out of the box, either to the downside or it pushes up to the upside. Once you do that, you know the direction, and that will likely be when it's time to start looking at those altcoins for potential reversals if Bitcoin drops to the downside out of the box. Sometimes Ethereum can also give us that because altcoins follow Ethereum a lot. And even when you have a look at Ethereum, there's literally nothing because we are still inside of the box and we haven't trapped anyone inside or outside. But I'll tell you something that they both did. And that happened on Friday, which is, if you don't understand how the Friday trap works, it's where it usually happens in UK, but this week it happened in US. Price will be sent one way, and then sometimes the US or sometimes the end of UK will reverse or repeat the level. So it's designed to be a fast move that happens in the Friday session to make you believe that a breakout is coming, whether that's to the upside or the downside. And so you get into that position and then price just closes back in the range. And so a weekend trap isn't a trend, it's a sideways consolidation, which is what you can see here. And the goal of that is to keep you in an open position, in a position where you can't take profit because it doesn't hit your take profit. And the reason that they do that is because when the market makers do come back in, when the market reopens Sunday, 5 p.m. New York, around that time, that they have liquidity so that they can hit stop losses. If you close your positions, they can't hit your stop losses and accumulate positions for themselves. So when we have a look at this, both on Bitcoin and Ethereum did it. Look here, this was the initial high of the day on Friday for Asia. And right above, they spiked up high during the start of US. So that was to trap longs. They immediately brought it back. This here was the initial low of the day on Friday for Asia. And they did exactly the same thing the other way. So this here trapped shorts. So on the US session, they trapped both longs and shorts, and then they jammed them into consolidation, which is where we've been stuck all weekend so far. But when you have a look at that on ETH, the price action is a tiny bit different to Bitcoin, and it might be giving us a bit more of a hint, because if you draw just a trend line to the highs and then a trend line to the lows, this here is, you guys probably know it as a symmetrical triangle, but in the method that I trade, it's called a trapping wedge formation. Again, it's trapped the highs, it's trapped the longs, it's trapped the shorts. They've jammed you into sideways consolidation so that neither shorts or longs can take profit. And when they're ready to make the move out of this weekend trap, it's probably going to be a big one. It's probably going to be, maybe not a big one, but it'll be a fast one. So it's impossible to know which way because both sides are trapped. One thing we can sometimes do is have a look at the liquidity that's hanging around. What have I got up here? Bitcoin. Let's have a look at the 7-day liquidity to see what's happened over the weekend, where it might make sense to stem price. Again, this will take a second to load, so let's do something else. What else do I want to look at? Another thing to keep an eye on is 𝗖𝗍𝗃 as the market opens, because 𝗖𝗍𝗃 is right in its vector candle zone over here. So if it makes it through to the top, it may continue to the upside. If you're looking for shorts, this will potentially help you. But as it gets to the top, it can also reject and come to the, be the end of that trend and come to the downside. So that's one to keep an eye on. Dominances are pretty flat, nothing else there. What's going on in our heat maps? So we can see here with Bitcoin wants to hold currently the 29.3 area, which is just the weekend trap box, so nothing exciting. We do have buys at 29,000. So if we get that move to the downside, we want to look what happens at around 29. We don't have anything else below, and above price, we've got people waiting to short at 30,800. Has this loaded yet? No, that's not the one I wanted to look at. This one here. All right, so if we have a look at the liquidity that we've got below price, 28,950 and 28,350 is significant. There isn't really anything significant below price. So it does make sense that they bring it down, but I wouldn't bank on that. Just wait to see if it actually breaks the box. And that is about all that I have for you guys. I can see you guys saying, what is her Twitter? My Twitter is 𝗕𝗓𝗕𝗂𝗕𝗓. I did post an update about Rune earlier. Sorry, it's chill with one L because of the character limit on Twitter. Someone said to me here, zoom out. No shit, Sherlock. We did zoom out on Rune, and I still think that those levels are the levels to care about. But actually, we were waiting for high block to load for Rune so that we can reassess. Is it going to come now? Here we go. Let's have a look at Rune before I let you guys go for the evening. Wow, look at this leverage build up here. It's not going to be a lot because it's an altcoin, but you're just looking at that rise. That's insane. Also here, look at this. Here's a little lesson for you. The pink that is below price is the liquidations of long positions. So if price were to come back, it's going to take out the liquidation levels of longs. The bluish colors above price is the liquidations of shorts. So as price moves up, shorts are getting liquidated. Here's how you know dumb money are driving this move. See these circles here? See how these circles are really, really big? But then in this move up, they're not as big. And in this move up, they're not as big. When the circles get bigger, the more price rises. That is FOMO. That is people jumping on thinking it's never going to pull back. And these people right here are going to be the market maker's first target when they are ready to reverse this price. So what you do if this decides not to freeze, we have a look at these big spikes out here because they're going to be the first target. And that is at 1.346 and 1.33. Let's have a look where that is. Let me just redo this. 1.346. Right, so these are gone. We'll get rid of it. But see how that is not a very big move right there? So price does not have to come back far to liquidate a hell of a lot of money. Why? Because idiots bought, quite frankly, idiots bought right here on these big circles. Don't be that guy. Just have the patience and wait. There will be a reversal. And if you don't want to short it, let the pullback happen. You still track it and you get in on the higher low if it actually does end up being a move that is proven. It's not proven yet. It's irrational retail money. All right, guys, that's all I have for you. I hope this was helpful. Sorry for my language today. Sometimes I get a bit passionate. But yeah, stick with it. Be watching for those reversal candlesticks and be safe out there. And just don't short just because it went up. That's the dumbest trading strategy on the planet. All right, guys, have an amazing day. I'll be in Bali next time I see you guys. Bye.